All right, folks, software stocks continue to get pummeled. I mean, just absolutely pummeled, ignoring all the arguments that maybe the selling is overdone just a tad. In fact, now there are suggestions that this could be a blockbuster period for software as a service and other niches within software. Now, unbeknownst to Blockbuster back in the day, its days were absolutely numbered right after Netflix went IPO. Look at that chart, right? The market knew something because Blockbuster shares never traded higher after that IPO. Now, my next guest is a strong believer in software, and he thinks all of this selling, I'm going to paraphrase for him, is nuts. Let's bring in Futurum Group, their CEO, Dan Newman. So, Dan, this morning, Jefferies threw in the towel, right? They downgraded Workday, Monday, DocuSign, Infineon, Infosys, and obviously all the bigger names are getting hammered too. What are they missing?
Well, Charles, great to see you. And there is some selling that is nuts. And I'll tell you, I think the biggest problem is we have a throwing out the baby with the bathwater moment. Not all software will be eaten by SaaS, and not all software will be eaten by AI, and not all software will survive the AI inflection. I want to be really clear about that because some companies came out over the last 3 or 4 years with features that became publicly traded companies that are now at risk. I look at companies that are in project management tools. I look at some of the design-only platforms or companies that have created software that just does expenses. I'm worried about these companies. But on the other end, there's enterprise software like SAP, Oracle, ServiceNow, Salesforce. These are core applications that run entire companies' businesses. They have all the proprietary data. They have all the rules. They're able to transact across borders in different countries with different regulatory and different compliance, Charles. These are incredibly complicated things. I mean, today, Anthropic, which was going to take out all of cybersecurity, had 24,000 Chinese bots attacking its software. And with its new AI security software, it wasn't able to stop it. So this idea that it's going to just be overnight, everything gets replaced, Charles, I just think you're right in your paraphrasing. It's nuts.
It is. I saw the CEO of CrowdStrike actually posed a question to Claude whether or not AI was going to take out cybersecurity, and Claude essentially said, no, that's not going to happen. So what's happening with this market? The CrowdStrike's down 11% right now.
The headlines sometimes write themselves. I just gave you that example with Anthropic. Sometimes these are the pullbacks that create the opportunities for investors. CrowdStrike, Palo Alto Network, Cloudflare, these companies are fundamental. They've built super platforms and applications that truly do allow enterprises to secure critical data. And if anyone is paying attention to what agents, for instance, are doing, is agents are basically nameless, faceless, badgeless employees that have access to all kinds of systems. The headlines, I can't even make these up, Charles. I read one today, I believe it was a Meta Labs safety employee that gave all of its email access to OpenClaw, and suddenly OpenClaw started in its production email box deleting all of her emails. And she kind of called out and said, oops, my bad. But the bottom line is that these tools are not ready for prime time. Businesses operate, they report to the street. They take really critical customer data and transact with these systems. They are going to be collaborators. Anthropic sitting on top of Salesforce or ServiceNow, that's powerful. Anthropic running your entire business. I talk to CIOs every single day. I don't know a single CIO of the serious company that is looking at vibe coding out the critical applications that run their business. I think we're getting ahead of ourselves here, and we're also throwing the baby out with the bathwater, not looking at all SaaS being the same.
Right.
And really, there are only a few companies that could potentially be completely displaced, and even that will take some time.
All right, I got a minute to go, and I want to go through some of the ideas you have. I think we talked not long ago, a week or so, about Now. Everyone loves the CEO. I have subscribers in the stock. They're getting pummeled, and people are getting nervous. What turns a service now, and let's say for also a Salesforce.com, because Salesforce.com went through this already over a year ago. The stock opened down. It was had a lot of pressure. They came out with the AI agentic, their own AI agents. The stock rebounded, but it's going through the same script again.
It's all about receipts, Charles. They're going to have to continue to deliver quarter after quarter after quarter, and it's going to take a little bit of patience. But ServiceNow had Rule of 55 growth. Mark Benioff and the team at Salesforce have pivoted to this consumption-based agent platform that is more data-centric, meaning more proprietary data. That proprietary data moat, the fact that they have platforms and the fact that they are moving pricing to more consumption are the three things I'm looking at. But I do think the market overall is in this sort of negative growth moment. So it's an opportunity for those with a little bit of patience. But I do think the companies that deliver over and over for the next 2, 3, 4 quarters, eventually the scare is going to go away and we're going to realize it's AI plus these critical applications. And then, of course, we will see a few of the small ones fade. And that's when everyone will go, there was a disruption, but
Right.
it wasn't all of the companies.
Right, and I will point out, I know you also like Oracle and Palantir here, but last time on the show, a week ago maybe, you did say stay away from Workday and I think Monday and a few others, which ironically enough, Jefferies were the names that Jefferies downgraded this morning. All right, Daniel, don't go far, my man. We're going to need you again soon. Hopefully we'll be saying, what do we chase here? What do we chase? Talk to you again soon.